Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm Steve Ankerstar, and I'll be your host today. Allison has the day off. Today, we'll be talking about the IRS Form 5498, the IRA contribution form. And this form tends to cause a lot of confusion this time of year, which is why I want to talk about it today. It does come out in mid-May, which means you're getting it right now, and it can spook people into thinking that they missed something for their taxes, or they didn't file something, or now they have to file an amendment. None of that is true, but I will clear that up today. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. All right, let's go ahead and get started. We're just going to peek at the futures here real quick and share these out right here. So yeah, futures are in the green this morning, so that's good news. Obviously, it's been a relentless and brutal sell-off over the past 7 to 8 weeks. So hopefully the market holds green here today. There's a lot of things that are pointing towards the bottom, and one of them is nobody's calling the bottom. Everybody's saying it's the end of the world, which is, again, one of the criteria for the bottom to actually be in. So we'll pull up the chart tomorrow, depending on how today looks. But so far, so good this week for a Monday. All right, to the Form 5498 IRA contribution form. This is your Investopedia page to take a look at this. So these come out, like I mentioned before, it comes out in mid-May. And the reason is because you have up until you file to square away your IRA contributions, right? So that means you can do it on April 15th or 18th or whatever the last day is of whatever particular year we're in. So therefore, it takes a little bit to count all the pennies and make sure everything's correct. And then the custodian, so I'm with Schwab and TD Ameritrade, but Vanguard, Fidelity, Robinhood, whomever, it takes them a while to go ahead and get these forms ready, and then out in the mail / online, depending on how you get your tax forms. But if you have an IRA, you're going to receive this form. We're going to go ahead and pull it up here in a second. But this is Investopedia. Again, I like looking here versus the IRS website because it's a lot easier to read. Excuse me. It tracks the contributions, any rollovers that you did. Roth IRA conversions are tracked on here, and RMD is if you're in the RMD sort of mode. It does still have the box for recharacterization, even though you can't do that anymore. And here's the important part. You don't have to do anything with the form itself. It does go off to the IRS, but you just need to throw it in with your tax form. So when you finish your taxes each year, if you're in the habit of sealing that envelope, don't. You have one more form inbound every year to be able to throw it in there, and then you can seal it if you want. I don't seal mine, I just have them in folders. But I literally have every tax form I've ever filed from way back in the day. I know you don't have to keep them that long, I just do. But yeah, because there's times when you want to go back, and if you have a Roth IRA, so why would I ever use this form? Well, the one time you will use this form is, well, a couple times. If you are doing if you're trying to take money back out of a Roth IRA, once the account's been open for 5 years, you can take your contributions back out. So if you want to reach in for some money, again, you take it out tax-free. You're hurting yourself further down the road because you have less money working for you that you've already paid taxes on. But if you have to go in and grab that capital that you put in, you're going to have to prove what you contributed. And you can go back through your tax forms and do it, or just pull out your 5498s, which show exactly that information. So that's one reason. The other reason is if you ever make a non-deductible contribution to your IRA, so think backdoor Roth IRA, right? So that's what you're doing. You make a non-deductible contribution and then you convert it, right? And you do it quickly enough to where there's no gain, so therefore there's no taxable event, but it's still reported. So you're going to get this 5498 showing that Roth conversion. However, if you say you had a job somewhere at the wash and roll, and you earned a couple $1,000, and you had a 401k there, and then you rolled that to a traditional IRA, and then you left it there for years, and then you eventually converted it. Well, when you convert that, that is going to be, you're going to have to pay tax on that money. If you've made non-deductible IRA contributions into that, and now you convert it. Now you have to do some math, or your account or your CPA has to do some math on what's taxable and what's not. So if you, my point being is, if you lose these 5498s or you can't find them or whatever, you could end up, if you're, you could end up, and you do any non-deductible IRA stuff, getting double taxed on some money. So it's really worth your time to keep all this straight. So if you have any questions, go ahead and reach out. But let's take a look at the form before we go. This is the IRS website. So obviously that is the source for information, not Investopedia. But I always go to Investopedia first for readability. But then let's pull up the actual form itself. Yikes and red. No, we're not going to do the red version of the form. Here you go. Here's a normal looking one. So you have your contributions, which are going to be in block 1. That's going to show you how much you put in, and you roll over contributions. So from a 401k, etc. Your Roth IRA conversion is going to go here. Block 4, no longer used. Full market value of the account. I think that is at the end, December 31st of the prior year, but I am not particularly sure on that. But generally, that's the fence for required minimum distribution. So that's probably what that FMV value is. I've not seen any life insurance stuff ever on a 5498. If you have a SEP IRA or simple IRA, those are going to be marked, separately down here. And then here's your Roth IRA contributions. And then there's your RMD date and RMD amount. If you take your RMDs, again, you can take these monthly. A lot of people that are in retirement just say, okay, I'll take it monthly and, divide my RMD by 12 and then take that on the first of the month. And that's your, paycheck or supplemental income coming in. So I would say various is almost always the term that's used there for dates if you take it more than one. And I think that is it. I don't know about repayments. Some people that contribute to Roth and have to back out, because they, are past the income limits. I don't know, but that's probably reflected on here too. So anyhow, that's your form 5498. So again, the big picture there is do not worry about it. Just file it with your taxes. You should always check it for accuracy, but just put it with your taxes. Realize the IRS has a copy of this too. And, eventually if you end up at the, some point in time doing something with your IRA, then you may need some of this bookkeeping stuff. And that's all it really is. So thank you everyone for listening in today. Don't forget to like and subscribe to get further updates. That's all we have for today's show. I'm Steve Ankerstar, and we will see you guys back tomorrow. Thanks.